Well, the Canadian dollar has been sliding to 52-week lows as global economic concerns remain. Host of Real Ag Radio, Shaun Haney, joins us now for more on this. Shaun, as always, thanks for being here. So what are the factors driving down the Canadian dollar? I mean, it slid down to 72.5 cents per U.S. dollar.
Yeah, it's great to be with you here today. So this is something that Canadian farmers and ranchers are watching very, very closely for sure. And, not just a 52-week low, but it's a 2-year low on that Canadian dollar. Now, in June of 2020, right at the beginning of the COVID-19 pandemic, the dollar actually slid down to just north of 68 cents, but did shoot up very, very quickly from some of those lows. The Canadian dollar is often thought as a petrocurrency. We've had recent strength in the oil market, which really hasn't necessarily helped the Canadian dollar. A lot of this has to do with the strength of the U.S. dollar. Currencies like the Canadian dollar, the British pound, the euro, all losing value in comparison to that U.S. dollar. Obviously, that can be very positive when it comes to exporting, but not so great when you're purchasing goods in U.S. dollars and trying to bring them into the country.
Yeah, I was going to ask about that. Talk about how it's impacting farmers and ranchers there.
Yeah, for sure. So, it's great for exporting commodities that are priced in U.S. dollars. So things like cattle, there is a really, really good example. Pork, another. Some of the grains. It's a really, really good conversion when you're talking about a dollar that's in the low 70-cent range. But, think about farm machinery, that's manufactured in the U.S. or maybe if it's produced globally and it's brought in to Canada, priced in U.S. dollars. The Canadian dollar, it takes a lot more Canadian dollars to purchase one single U.S. dollar. And so goods get more expensive coming into the country, which definitely has an impact. The other part of it is maybe less of an issue, but really important for places like Arizona and Florida. This is not good for Canadian snowbirds that are looking for some warmer weather during the winter that are in retirement. A lot more expensive when it comes to spending that winter in the warmer climates of the U.S.
Yeah, that's a good point. They're going to be on a tight budget for sure, looking to get out of the cold. Shaun, before I let you go, future interest rates, when decisions are made by the Bank of Canada, how will that impact the dollar there as you move forward?
Yeah, that is a very, very interesting question. I read an article yesterday talking about how if we continue to see this slide in the Canadian dollar relative to the U.S. dollar, it may force the Bank of Canada to get even more aggressive to try to stop the free fall, or the slide, I should call it, and try to prop up that Canadian dollar. There's a lot of debate here all the time is, what is a healthy currency exchange rate compared to the U.S. dollar? There's lots of debate about that. If we're to see it dip into the 60s, the Bank of Canada is really going to have to be making some decisions potentially, and even getting more aggressive, not just to fight inflation, but also make sure that currency doesn't slide any lower. It's
a slippery slope for sure. Shaun, thank you so much. You can catch Shaun on his show, Real Ag Radio, which airs at 4:30 p.m. Eastern weekdays on Rural Radio Channel 147. That's on Sirius XM. And of course, we love having him here on the Market Day Report. We'll talk to him again tomorrow.